it's not bad after the big rally yesterday. At least there's some follow-on that we're seeing this morning. The sensex is up about 100 odd points as well. And Bajaj Finance is the one that's under a lot of pressure. So it's really dragging the Nifty, preventing it from getting above the 21,800 mark. Both Bajaj Finance and Finserv actually are down in the red. So those are the only two stocks, apart from ITC, which is down about 1.5%, NTPC as well. So these four Nifty stocks, Bajaj Finance, Finserv, NTPC and ITC, are down 1.5 to 4 odd %. On the flip side, though, you have ONGC that's batting for the bulls this morning. Dr. Reddy's is up 0.7%. SBI Life is up about 0.6%. Infosys, UPL, Hindalco, Tech Mahindra are all in the green as we speak. And JSW Steel is also up about 0.6%. Reliance, by the way, is piling on some more weight. So it's, it's stable above that 2,900 mark. And Tata Steel is up almost about 0.5% as well. Just take a quick look at L&T ahead of its numbers, how that chart is looking, because this time around, not just numbers, but you have a large focus on capex in the budget too. Although being a vote on account budget, not much may be announced, but nevertheless, I mean, these capex related stocks see a sentiment boost. So L&T also in focus, but otherwise decent opening for the market. Now up 70 points, sensex up almost 200 points. Not bad at all.
Well, that's right. But, Bajaj Finance is getting smacked. And I think they've gone ahead and they've increased their credit cost guidance to 1.75 to 1.85% of the AUM. That would mean that it's up by around 15 to 20 basis points. So that's the reason why, in fact, the stock is under some pressure. And it's down close to 4% as we speak. In terms of other names that are moving around in early morning trade, you have NBCC. Well, that's flying away up 5.5%. LIC Housing Finance up close to around 3%. Petronet LNG up close to 2% reaction to its numbers. And Birlasoft as well continues to move higher. That's up close to around 2%. For this month itself, I think it's up close to around 18%. So big move is what we're seeing on that one. In terms of other names that are seeing big volumes in the first few minutes, you have Restaurant Brands Asia. Well, that's up close to around 6%. I think they'd come out with their numbers a few days ago. So I think that's reacting to that one. I saw a couple of brokerage notes as well. So that's up. You have NHPC that's up close to around 5% in trade. Dhanlaxmi Bank up close to around 5% as we speak. Jyoti Structure is one of those stocks that has moved from around 10 to now around 30 rupees. And in fact, it's a 2,000 crore market capitalization company. So big move is what we're seeing on that one as well. Start is in the green. We're holding with a gainer front of 50 points odd. Bajaj Finance, that's the big disappointment today, down close to around 5% as we speak. And it has a weightage on the Nifty Financial Services Index. So that's why, and that one plays out expiry today. So keep an eye out on that index as well. Prashant.
Well, 50 points, right? I mean, 21,790 is where the Nifty is at right now. And we'll just look at the Nifty Bank as well, which is up about 1/3%. That's a 170-point gain on the Bank Nifty. So these PSUs, right? I mean, the top three volume-led gainers are all PSUs. NHPC is up 4.5%. Huge volumes, actually. NBCC is up another 4%. Again, huge volumes. There is IFCI out of the blue. I mean, started running up 8% again this morning. I think after yesterday's 10% move. There is IRDA, IREDA, which is up another 5% to start the day. SJVN is up, 1.5 odd %. So slower start there. Put up something like a Shakti Pumps. It started at the limit 20% yesterday and ended 20% higher. It's up another 12-13% this morning. These are very large gains coming through on decent volumes. 2 lakh shares, 1430 on Shakti Pumps. There is another momentum stock recently has been Sterling Wilson, which was I think about 5% higher yesterday. It starts 1%, slower start today, but it's above 600 rupees now. Venus Pipes is up another 8%. I think yesterday it did well. 1570 or so on Venus Pipes coming through. So that's a big gainer. We've got what else? Ashoka Buildcon, which is up about 6%, 182. UTI AMC starts about 7.25% higher. Dhanalakshmi Bank is up about 4 odd % as well. So this is, I mean, the gainers list as it comes through at this point in time. Market breadth is extremely positive. The only big volume-led notable loser is what's coming through on Bajaj Finance with a 4% loss. NTPC is pulling back a little bit. NTPC is down about 2%. And Adani Enterprises is, 0.4%, 0.5% lower after yesterday's near 4-5% gain. 30.50 on Adani Enterprises. Adani Ports is down 0.5%. Adani Green is down 1%. Adani Energy Solutions is down about 1.6% as well. So a little bit of pullback to start the day here as far as the Adani Group stocks are concerned. Well, let's welcome in our market master of the day. Gautam Shah is founder and chief strategist at Goldilocks Premium Research. Gautam, good morning. Great to have you with us here. I'll tell you, this election year, and I thought January perhaps will be a little weaker, seasonally it's weaker. So January we got the volatility. At a slightly sort of top-down level, I thought maybe till March the market will not do very much and then we'll start an election rally. But there is no stopping, there is no halt, so as to speak. That's not in the dictionary. The rally is on, and we all saw what happened yesterday. Just your thoughts, near and medium term.
Good morning, Prashant. Well, 3 months is a very long time. I think we live in a world where everything is happening really, really fast. So if the markets have to go up, it's fast. When the markets have to go down, the discounting and the correction happens in a few days. Watch what in the earlier bull markets used to happen over many weeks. At the start of this month, we were very clear that January is going to be a little challenging, and we recommended not to take any adventurous longs. We went through a sideways correction. It was more range bound in nature. The Nifty lost about 4%. So we had that 800-point, correction from the recent high all the way down to the recent supports. But the manner in which we have stabilized, I think, is quite commendable. To understand bull markets, sometimes you have to study the down days and not the up days. Because when you have a very overbought scenario and the market refuses to break support levels, it just tells you that there is a lot of strength in the system. And the manner in which Reliance just single-handedly took the market higher in the last couple of days just tells you that this market has a lot of stocks, heavyweight stocks, batting for it. But as we stand today, I think 21,850 is a very important resistance number. I think there could be a bit of a challenge to clear this. But if the market does get past this number, I think we are going back to lifetime highs of about 22,200, 300. But I don't see a runaway rally. I think I've been maintaining this view that we are going to be mostly range bound. But I think this is a very theme specific, stock specific market, and support levels are, holding up well. So we simply don't overanalyze, and we just tag along, keeping support levels in mind.
Okay, so 21,850 is the line in the sand on the upside, right? And you're saying that if that hurdle gets crossed, then it's on the way to new highs. But we can't talk about a market move without talking about Reliance. I mean, in the last couple of days, that's been the front runner. Do you see more upsides here, Gautam?
I think the working view for the last few weeks is that the IT sector and Reliance, put together had a very good chart setup. In fact, Reliance is coming out of 15, 18 months of underperformance. So there was always a lot of catch up. And I think the manner in which it took out the previous high of 2650, pulled back to that number, and then rebounded in the last few days, tells you that underperforming phase is gone. So I think this is going to continue for many weeks and possibly many months to come. You might finally see that number of 3,000 that we've been waiting for almost a couple of years now, and maybe much greater upside, because the consolidation was so long and so large that the upside potential for Reliance is good. So if you look at the IT basket, if you look at Reliance, and if you look at the bank Nifty, I mean, the levels at which some of the top banks are, I do believe looking at the heavyweights is that the market should be safe.
All right, Gautam, good to see you win. The problem, I think, has been HDFC Bank, right? It's broken all those technical levels. When you look at the 20, the 100, the 200, all of them, they are out of the way. The stock is hovering around that 1,450. And that's the largest constituent on the Nifty in terms of weightage. What's your view technically on this stock? Where does it find some support?
Well, honestly, we've stayed away from this for a couple of years now because, I don't look at things in absolute terms so much. If you look at SBFC Bank relative to the Nifty, you'll see that it's been in an uptrend for the last 1.5 years, or for that matter, even a couple of years. So, and because there is no outperformance, there is no point committing your capital when you know that there are immense opportunities, in other sectors, in the mid cap space and in the large cap and in the small cap space. But I think talking about numbers, 1380, 1400 is pretty much the long-term support. I do know a lot of people find value at these prices, but as a technician, I want to see momentum and strength before I actually commit myself. But the silver lining is that breaking 1380, 1400 might be a little tough. So I think the chances of HDFC Bank recovering from here is pretty high. But as I said in my last interaction as well, for us, the high conviction idea is SBI. So, that's our top pick for the year.
If you're looking for momentum, then look no further than PSUs, Gautam. What are your top picks there?
Yeah, what an incredible run, Prashant. It's quite amazing that some of these stocks were languishing for years. They were undervalued, they were underowned. Nobody looked at them. And suddenly when the momentum picks up, look at the kind of change that you've seen. I mean, a BHEL at current levels, BEL, BEML, NTPC, REC. And the good thing is that they're still not overvalued. I think that's the reason a lot of smart money is committing into these stocks even at these prices. So be careful. Don't run after stocks which have had a massive run in the last 6 to 8 months, but go after stocks which have not done as well. So I think SBI and Bank of Baroda fit the bill, but the likes of PFC, REC, I think they just run up too much. This is a parabolic run, and these are levels to take profits.
All right, parabolic run and levels to take profits. But you're saying that amidst the entire PSU space, SBI is still your top pick, right, for this year?
I think so, and I want to believe that, keeping the risk reward in mind, because at a 21,700 index, risk reward plays a very important role. When you see that knee-jerk reaction of 3-4%, when the Nifty falls 300-400 points, suddenly everybody rushes towards safety. So I think keeping that in mind, and the fact that you have so many events and earnings lined up over the next couple of months, I want to stay with the safer name. And SBI is still extremely cheap, not just fundamentally, but technically. I think it's in a wonderful space with very limited downside.
Okay, so that's on SBI. Got it. I just wanted the clarification there. Where else do you see traction? There are so many smaller spaces that are doing really well, right? Railways, for example, that entire railway PSU basket is looking good. Anything in that space that you like? Autos has been picking up pace for a while. Where else do you see leadership emerge?
Well, I think railways, we've been very clear that these are levels to take profits for people who actually entered at lower levels. I know every day is a higher high, and you might feel that selling at these levels, is a problem. But I don't see it that way. I think railway is very, very overdone on the charts, the kind of parameters that we look at. And as I said, I'm looking at risk reward in mind. So I still feel that IT, pharma, and metals are three pockets of the market where I see significant outperformance over the next 3 to 6 months. IT has been doing well. Our working target is about 39,400, which is the lifetime high. Pharma, I think, has another 2,000, 2,500 points from here. The moves are excellent. And metals, the likes of Nalco, SAIL, JSW Steel, Tata Steel, Hindalco, all have very good setups. And not to forget the mid-cap, small-cap space. You are in an environment where you don't need to look at the Nifty and the Bank Nifty every day. Just focus on solid, fundamentally sound companies in the mid-caps and small-caps, and you'll do well for yourself.
All right. What about defense as a theme, Gautam? That was the other big outperform, I think, for the last 12 to 18 months. It's gone a little bit quiet, actually, in the last month or so. Anything out there?
Sorry, I didn't get the sector.
Defense. We spoke about railways. What about defense?
Yeah, defense, again, is a great story if you look at it 3 to 5 years. I mean, as a long-term investor, I want to stay committed. But from a near-term perspective, given the parabolic run that it's seen, and because we look at the technical parameters, there is nothing to justify buying aggressively into defense at these prices. Again, if you're taking profits in defense and railway, if your view is 3 to 6 months, then I think move to other pockets in the market, which might be a little safer. But if you're an investor with a 3-year horizon, stay committed. There is more to come, and you'll just have to ride through corrections.
Absolutely. By the way, the market's in the red. I mean, the Nifty is down about 22 points. And just to quickly take note, so a strong start, 70, 75, 80 point higher start. And this is very early in the session, but I mean, what we were discussing in the morning was don't chase after a very, very strong start. I mean, it becomes very hard now to manage that trade if you sort of go long after what we saw yesterday. So this is a bit of a pullback that we have. As I said, this is the first 10, 12 minutes and things could change, but that's what we have right now. Just a few names in the broader market where, maybe on the downside, which we only looked at, say, Bajaj Finance, but, even stocks which started strong. Look at complete turnarounds. Intradis will tell you, IRDA is started 6% higher, it's down 2%. If you can have that up. And now it's the biggest volume, it's still the biggest volume stock, but on the downside now, IRDA. Same with IFCI, started 6% higher, it's down 7%. So that's a 13% swing already, on IFCI coming through. Look at that. There is IRFC, maybe you could look at. It's again, I mean, it's a swing on the downside, 2% lower, but from the highs it should be much more. And something like Solar Wilson, Sterling Wilson, which is down about 3.5%. It's started 1% up, but now that's a 4.5-5% swing from the day's high as it kind of comes through. So this is what we have on the downside now. On the upside, maybe just a quick look at to see if there's anything more in the mix. BHEL, I didn't spot that in the morning. it's on the upside is the biggest volume-led gainer with a 4% gain, 231 on BHEL. So that continues. JP Power out of the blue. I mean, it's an 18 rupees name, 18 rupees stock, 4% higher, but very large volumes on JP Power coming through. And UTI AMC, maybe, I mean, used to be the cheapest asset management stock. 10% on UTI AMC, stocks at about, 955 at this stage. And CESE is another one, which is about 5% higher. So these are newer names. Within 10 minutes, there is so much rotation, which kind of is visible with some of the big gainers, which started strong lower, and what started lower or flat now, occupying the top position in that sense. Gautam, anything in the pharmaceutical space that you like? Fundamentally, that's one name that we hear quite a bit, that valuations are still not expensive. US generics, etc. Things are improving. I don't know if that reflects on the price action as well.
Well, Prashant, pharma is not exciting enough, because I think a lot of mid caps and small caps and the names that you alluded to, I think many of these names have been of the questionable variety for a long time now, but they all have great momentum at this point of time. And that's probably the reason I think the momentum has trickled into the grade C and grade D stocks. And as traders and investors, you need to be very careful not to chase momentum at a 21,700, 800 index, because a lot of positives are already pretty much discounted, on an overall basis. But talking about pharma, I think Sun Pharma remains our top pick. I think it has a fabulous setup and it will do much bigger things going forward, followed by Dr. Reddy's, followed by Glenmark. And I think all of these stocks have great setup. So when I spoke about the NSE Pharma Index, our working target is about 90,000. So I do see a 15 to 20% move in that entire space going forward. I mean, if you look at the ratio charts of Pharma versus Nifty, you'll realize that there is clearly a lot more performance ahead.
Okay. I wanted your thoughts on real estate, because, this space has come back in a big way. And even this morning, right, you have names like Brigade Enterprises, DLF has been doing really well, macro tech developers as well. Anything in that space that you like from a technical standpoint?
No, Sonia, I think it's time to take profits. I think it's a very, very overdone. I think that's been our view for the last couple of weeks. We actually caught it very early, 15, 18 months back, because there was this breakout from a 10-year range. Now, I think all of that is played out really well. We still like DLF and Oberoi if you have a longer term view, say 1 to 3 years. But from a near-term perspective, I don't think these are opportunities to get into real estate. So stay away.
Okay, all right. Good speaking to you, Gautam. Thanks so much for joining in and giving us that view. Wishing you a good day ahead. Well, let's talk about some stocks that companies that came out with their numbers. Dodla Dairy, well, that's a stock on our radar. It's been surging on the back of very strong showing in their Q3. Their gross margins were up close to 470 basis points. EBITDA as well was up 55%. Mr. Sunil Reddy Dodla, the managing director at the company, joins us on the show. Hi, sir. Good morning, and thanks so much for joining in. Well, these numbers look very, very good, so congratulations. Could you tell us what is the expected quarterly sales volumes as well as the run rate going forward? For the past quarter, I think you did around 17.5 lakh litres per day.
Thank you very much for having me on the show, and good morning. I think looking forward to the quarter, because this is the season for us, the summer starting and the temperatures going up. Our sales volumes will start to improve and increase more, and we will maintain a similar kind of a trajectory of terms of the revenue growth that we always have between the 12 to 15%. We will maintain the 12 to 15% growth rates on the sale volumes.
Okay, all right. If you could give us some further clarity then in terms of how much of your revenue is coming in from value-added products. I mean, where do you see that number headed? I think last count it's moved up to around 25.5%.
Yes, I think every year we are clocking a 1% increase in value-added products. This is because the overall milk pie itself increases. I think going forward, we look at this 25% moving closer to the 28%. Ghee was one product which we had withdrawn from because of what the earlier shortages that we had, which we are concentrating this year on to see that ghee as a product will also come into the sale. And once that comes in, we will see a little more stronger traction in the value-added products increase. So that is what we'll be looking forward for.
All right. What is the market share currently amongst private players, and how has it changed over the last 6 to 12 months?
Private players, predominantly, if you look at, it's also state-to-state variation. For example, Karnataka, the cooperatives will be larger, private sector will be lower. But I think as an overall all-India basis, there's a study which was done by, I think, one of the agencies, which has put it at around 50-50. Private sector is 50, cooperatives are around 50.
No, my question was, what is your own market share right now?
Our own estimates are we are around 7.5% of the market share in the areas where we operate, the sum of the areas where we operate.
Okay, 7.5%. And do you have any target? Are you doing anything to increase your market share in the areas where you operate? If yes, can you elaborate?
Basically, this is after we have started our ad campaign and starting to move forward with a little more of our ad budget. Earlier, we had a very small budget, which we are enhancing and improving. And we're also doing a lot more things in terms of go-to-market strategy, where we are looking at trying to improve our process and systems and get deeper penetration in the areas where we operate. I think with these two initiatives, we'll be focusing more deeper in terms of becoming a stronger brand in the areas where we are weaker.
Okay, got it. So could you tell us, what are the ad spends as a percentage of your sales right now, and how is this likely to develop going forward?
We are at the moment around 0.4% of our sales revenue, but I think we will move it to around a percentage, 1 or 1.2% as we go forward, sir. From where we are at point.
Over what period of time?
Over a year. For the next year, we will target around 1.2% of the sales revenue to be our advertisement.
Is any particular reason for that? I mean, is it sort of defending
the reason is
from competition or sorry, go on.
Basically, starting to we want to go on the growth mode, where we're starting to acquire land to start a larger facility in Maharashtra. And once all these come in from our present sales of, operating volume in India for 15 to 16 lakh liters on an average, we are looking at reaching a 20 lakh liter per day target. Against that, we are preparing to see how we can move forward to get into that growth mode in a shorter period of time. And with that in mind is when we are trying to push for the overall brand improvement on one side and the procurement improvement on the back end.
Okay, all right. Could you tell us what is the targeted margins then? Top line growth, we've got 12 to around 15%. What is the targeted margins, given that your ad spends could go up as well, but operating leverage as well will play out? So give us a target out there. And animal feed, I understand that you are at commission another unit. And as of 9 months, you've done close to around 60 crores. How do you see this revenue stream ramping up, say for FY25?
So basically, when we look at the revenue stream for the animal feed that we are looking at, it should be, for example, we were doing around 2,000 tons a month. For the current year, we're going to be targeting it to become 6,000 tons a month, which should at least add another 100 to 125 crores of revenue for the current year. That is for the year 24-25 March is what we are looking at as what from the animal feed side. And coming to the ad spend and the margin that you're looking at, we think we will still maintain higher single digits towards closer double-digit margin. Because as you guys know that we are in the dairy business, which is a slightly associated with the milk prices also, which fluctuate and gives a change. But the current margin we look for this quarter will be what we have declared for last quarter, should be the same, because we don't see any changes in the prices of procurement and the selling price. For the next 6 months, we are confident that because the system has a lot of powder and butter which has come in because of a good flush, we also think that will maintain at least in the higher single digits to double-digit margins.
Okay, just to clear out the point on animal feed, you said for this year, what does it end with? And for next year, it will do 120 crores of revenues. Is that correct?
Additionally, whatever we are doing from this year, right? So whatever this year, if it's 50, 60 crores, we will add another 100, 120 crores for the next year. So it will be around 175 to 180.
Okay. I wanted to also understand about 70% of your business comes from the south, Andhra as well as Karnataka. So do you have any plans to increase your geographical reach? If yes, what would it look like over the next 6 to 12 months?
A geographical reach, basically, we've also, after we did our acquisition into Sri Krishna Dairy, we have entered a bit into Goa. And once a Maharashtra plant starts, we might not cater to the entire Maharashtra, but we will start with the areas surrounding Sholapur to be our marketing as areas to start with, and deepening our presence in the Andhra Telangana region also, which I think Telangana we are the weakest, which will concentrate to make it a little more stronger for us. And
when will Maharashtra begin, you said? What are you looking at in terms of a timeline?
12 to 18 months to start the plant in Maharashtra.
The plant in Maharashtra will take another 12 to 18 months. Okay. All right. And just one more word on ad spends. I mean, I didn't get that percentage. As we move along in the next 1 to 2 years, what are you looking to keep the ad spends as a percentage of revenues at?
From the 0.4 that we are at, we would like to take it up to 1 to 1.2% of our revenues.
1 to 1.2%. All right. We'll leave it at that. Thank you so much for joining us, Mr. Dodla, and all the best with, the next couple of months in terms of your earnings performance. That's Dodla Dairy up 1.5%. The market is quiet. It's actually moved into the red right now. And the pressure is coming in, of course, from the Bajaj twins, Bajaj Finance and Finserv. But Ultratech Cement is also down about 1%. HDFC Life is down. NTPC is under pressure. Titan, ITC and Reliance is just, taking a bit of a breather after that huge move that we saw in trade yesterday. But let's take a quick break. On the other side, we'll be joined by the management of SBFC Finance to discuss their third quarter earnings. Stay tuned.
Okay, welcome back. The market's just slightly sideways, 10 points lower. From the highs, of course, it's an 80-point drop, but that was only temporary. Right at the word go, there was that flourish of an open, but then nothing very much beyond that. We can just maybe take a look at Bajaj Finance, which is actually under a fair bit of pressure. So that was an indication of the pre-open. It's down 4%, Bajaj Finance, and just on 6,900 now on that stock. And very large volumes for this time in the day, right in the morning. Look at something like a Rain Industries. Rain had a vertical sharp rally in the last 5 or 6 days, and now it's seeing a slight pullback from 150. It moved up to 185 kind of levels, and in 5 days flat, it's now seeing a little bit of pullback. Large volumes on this one, and something similar on Sterling and Wilson, which has been just on it's been moving circuit to circuit, and it's down about 4% this morning. KPIT Tech has been down for the last, 3 days in a row now. I think Nimesh was also talking about it yesterday on the on D Street Chatter. So, 4 days back, the stock was at about 1560, and it's fallen to about 1375 or so, KPIT Tech. And that is a sharp fall for a name like this one. Borosil Renewables, for example, saw another one of those names. That solar, the rally started once you had that solar rooftop news which came through on Borosil Renewables. It moved up from, the day prior, from 500 all the way to about 633 in about 5 days flat, 5 trading sessions. And from, 650 was the high. From 650, it's given back about $50 with the fall that we are seeing right now. So lots of stuff happening with, some of the sharp rallies getting a little bit paired in terms of what you have right now. NHPC is a new one, which I think we can spot for you. It's BHEL was the big volume-led gainer. It's NHPC now with a 4.5% gain. So market breadth still positive, not as strong as where it was earlier in the day. Sonia.
I just want to point out one stock, Tata Motors. It has hit a fresh 52-week high today. It's 850 rupees. If you just pull up a one-year chart of Tata Motors, it's doubled. A year ago, it was 400 rupees. Same time last year, I think 30th Jan last year, it was 400 rupees. Today, it's 851. That's the kind of traction. And the reason I'm pointing it out is this week, Tata Motors comes out with earnings. Expected to be quite strong, as is the case with most of the other auto companies. But particularly for Tata Motors, JLR has come back in a big way. Some of the global markets have picked up. And for Tata Motors, the biggest positive is really the cleaning up of their balance sheet. Free cash flow positive, debt has gone down. And that is something that the street has really rewarded the stock for. So terrific move on Tata Motors. Ahead of its numbers, that stock is looking good.
All right, let's talk about some stocks that are on the move today. Upasna is joining us to tell us about Kabel. Upasna?
While company reported a weak set of numbers, revenue saw an uptick of almost 10.5% on YoY basis. The EBITDA saw a downtick of 6% on YoY basis, and EBITDA margins were down almost about 120 basis points and stood at 6.9%. The company recorded a flat PAT growth at 71 crores, and PAT margins were also down about 50 basis points at 4.3% versus 4.8%. Now, coming towards company's revenue mix, the share of exports this quarter increased by almost 5% on YoY basis and stood at 26%, while domestic contribution stands around 74% for the quarter. Now, coming towards company's business mix, the wires and cables, which is almost 88% of the revenue mix, the revenue saw an uptick of almost 9% on YoY basis, while the margin saw a downtick of almost 200 basis points, stood at 8% versus 10.3%. FMEG segment is where the stress lies, which contributes almost 12% of the company's overall revenue mix. The revenue in this segment saw an uptick of 18%, but PBT saw a loss of almost 12.3 crores versus a loss of 34.7 crores.
All right, thanks a lot for that. That's Kabel. But Orchid Pharma is also in focus. Ekta is here to tell us why to watch that one. Ekta.
Thanks for that. Well, it is important news which is coming for Orchid. In fact, it was one of the triggers for the company, according to analysts who were looking at it quite closely. It is an antibiotic, which is basically a primary novel invention by the company, which has now received European Medicines Agency approval. So that means the European regulators' approval. Now, this particular antibiotic is expected to treat complicated urinary tract infections, pneumonia, and other kind of bacteria. Now, why exactly is the stock higher is because it marks the first instance of an Indian-invented drug to reach this stage of clinical development. And hence, you're seeing this kind of double-digit gain coming in for Orchid. Now, the other thing is that there is antimicrobial resistance which is taking place, which is basically resistance to antibiotics. And within that context, you are seeing development by companies such as Orchid within the antibiotic space getting approval in a space which requires new drugs to come through. And hence, the antibiotic market for new antibiotics is actually surging. Now, just want to point out that the estimated annual global sales could be around $200 to $300 million per annum on a 10-year average basis, according to analysts. And Orchid had, in fact, out-licensed this drug to a particular company, Allegra. So they will be receiving royalty sales from this particular drug, is what I understand. And it could range anywhere between 6 to 8% on worldwide sales. So nonetheless, it's a big development simply because they have received approval for an antibiotic, which is a primary novel invention, and within a market which needs new drugs, which is within the entire antibiotic segment. And hence, the opportunity seems to be large.
But Ekta, thanks very much for that. That is Orchid. I mean, 20% locked up as we speak. Let's focus on SBFC Finance now. It's a fairly recent listing. The third quarter earnings saw a strong AUM growth along with healthy margin expansion, although their asset quality was a bit under pressure. Asim Dhruv is Managing Director and Chief Executive Officer of the company. Mahesh Dayani is Chief Business Officer of the company. Both are with us here on the call. Thanks very much, gentlemen. Great to have you guys. Prashant this side. Asim, if I can start by asking you, just describe what happened in the quarter, because I mean we heard from the RBI on risk weights, etc. I'm not sure how much of an impact that had. I was looking at AUM growth on a quarter-on-quarter basis. That was about 10% growth. Disbursement value growth was about 2%. Let's start there. I mean, just describe to us the backdrop that you saw in the third quarter and how things looking now.
Thank you. Thank you for having us on the show. In a business of NBFC, you will have cycles. So you will sometimes you'll have credit cycles play out. Sometimes you'll have regulatory cycles play out. Sometimes liquidity. Sometimes interest rates. It's never without action. So this time there was a regulatory cycle playing out, and what it did primarily was that it pushed the cost of funds up. by 25 basis points across all categories of lenders because the risk weight from the banks to the system changed. So that was one of the things. The second is that it put extra capital requirement for unsecured loans. Now, unsecured loans is something that we do not offer, so that did not directly affect us. But the system interest rate increase directly affected all lenders. So and as we are seeing, liquidity in the system has been deficient, and the cost of that liquidity has got passed on downstream. But in a business, these cycles come, and you account for these businesses, the business cycles, by ensuring that your product program is robust. So what we generally do is that we have a variable interest rate policy, and whatever interest rate increase we get, we pass on. So if you look at the quarter for us, it's been stable. Margins have been stable. The growth has been stable. Nothing really very different. A bump up in profit this quarter is primarily because the full proceeds of the IPO got deployed in this quarter. So the benefits of the 3 months is primarily what you see. But apart from that, it's just been growth as usual.
Okay. Disbursement growth is at about 20% this time around. On a year-on-year basis, right? Quarter-on-quarter, there's barely any growth. So Aseem, just a follow-up over there, what kind of disbursement growth are we looking at by the end of FY24 and 25?
So see, if you look at volume growth in disbursal, it's 8%. Value growth is 2% because the ticket sizes have softened. So as we go and also look at higher yielding assets, we have guided ticket sizes between 9 lakhs to 11 lakhs. It used to be 10 lakhs earlier. It has now come down to 9.3 lakhs this quarter. These number varies a little, so it's not an exact number that comes every quarter. Sometimes you get 9.3, sometimes you get 9.5, but it'll be somewhere within this range. And as the ticket sizes come down, the value growth may be different, but the volume growth continues. So we are not seeing any pressure on growth as of now. And the basic what we have guided the market is that 5 to 7% quarter-on-quarter growth in AUMs. We are trending at the higher end of the guidance range as of now.
All right. Hi, good morning, Aseem as well as Mahesh. Good to see you all in. Well, I want your guidance on 2 numbers. One is on the NIMs and on credit cost.
So the NIMs, we've always been guiding that the NIMs are going to be upwards of 7%. So we're 50 basis points higher than that. One of the key confidence that we get that from is the entire book is variable. So you have the ability to reprice your assets once your cost of funds tends to move up. So we continue to guide that our margins are going to be, spreads are going to be above 7%. Net interest margins are slightly higher because of obviously the capital benefit that's coming. In terms of the credit, the gross NPAs have been stable. They were 2.4 last quarter. They continue to be at 2.4% this quarter. Our credit costs have been stable at 80 basis points. They continue to be in that particular range. We've been always guiding at sub 1%. So by and large, moving forward also, I think our growth looks solid. 5 to 7% practically means that you would double every 3 years. Our cost of operations is beginning to come down as the distribution is beginning to sweat. And our cost of credit is in a range bound of close to around 80 basis points.
Okay. So what are you doing, Mahesh, in terms of, increasing your client acquisition? I mean, what is the strategy that the company has over the next 12 to 18 months?
So Sonia, if you look at our distribution, you will see that most of our states barely cover 1/4 of the total districts. So each state in our country has close to around 30 to 35 odd districts. So we're barely at 7 to 8 districts or probably 8 to 10 branches in a particular state. The potential for us is to go to at least 2/3, if not 3/4 in a particular state. So you will see us gradually expanding. So we're expanding 25, 30 branches every year. The whole process is that we put in branches, make them profitable, and then move on to the next set of branches. So if you look at each of our matrix, which is disbursal per branch or disbursal per head count or employee cost to disbursals, each of the ratios, you will see us on the favorable side compared to any other peer in the industry.
Aseem, one of the, and this is, your book is relative, you're a small book at this stage. I remember speaking with you, you said, well, growing up to a certain size, right, is clockwork with an experienced team like yours. I mean, that's going to be gettable. But there is is there a scramble for deposits, and how is that likely to develop? That's the bigger concern for the banking system. And is there going to be any impact for you, your business, Asim?
Yeah, so see, we are right now in a liquidity deficient environment. And if you look at the current VRR of 2.5 trillion, what RBI is also doing is infusing urgent liquidity into the system, because the system is 3.5 trillion liquidity deficient. So in such an environment where the loan growth exceeds the deposit growth, and where the government spending has softened considerably before the elections, when the private sector spends has not yet picked up. So in such an environment, you can understand that there is a scramble for deposits at the banking system, and the rates are being pushed up. And when that happens, the NIMs of the banks come under pressure, and banks then look at passing on those NIMs down to the lenders, and the whole system liquidity, then it seeps through. So ultimately, we are going to live in a rising interest rate environment in the current year as well. So I don't think we are going to see any ease off the pressure, even if suppose tomorrow repo rates were to come down, which look unlikely at the moment. But even if that were to happen, the MCLR seep-through of interest rates will keep coming on. So we have to brace for both tighter liquidity as well as more expensive liquidity in the system. As long as the loan growth continues at this pace, this will get supported and absorbed, because India has always been a high interest rate environment. So our borrowers, to a great extent, have been used to higher interest rates. We had a extremely soft interest rate regime for a fairly long period of time, and it is now a reversal to the mean in some sense. So we are in an environment which is higher for longer, and all of us will have to adjust to that environment.
All right, and you guys are able to pass it on, right? I mean, variable book, as both of you said a few times. Mahesh and Asim, great to have both of you here. Thank you very much for that, for some of the insights as to the quarter gone by, and a little bit of the look ahead as well. So that is SBFC, Small Business Finance and Focus. Markets down about 30 odd points, 21,700 around is where the Nifty is trading at. Sonia.
Okay, LG Balakrishnan, right, is the other stock that we're looking at. Now, this is the third consecutive quarter of a weak performance by the company. Their margins have declined. Revenue growth for the last 3 quarters has barely been 3 to 4%. B. Vijay Kumar, the Chairman and Managing Director at LG Balakrishnan and Bros, joins us now to talk more about that. Sir, thank you so much for joining in, Mr. Vijay Kumar. I want to start by asking you about what's going wrong, because it's been 3 quarters now where you're unable to get above the 5% top line growth at a time when the auto sector is booming. Earlier, you had spoken about how, places like Europe are struggling a bit. But what went wrong this quarter, and will you be able to meet that 10% top line growth guidance that you had earlier spoken to us about?
We should do about 6 to 7%. 10% may not be possible, but we are aiming at about 7%.
Okay, so 7% growth. So you're scaling down your guidance to about a 7% growth on the top line in FY24. And is that a single-digit growth something that you see in FY25 as well? Do you think the slowdown that you're seeing in the business is something that could be protracted over the next couple of years?
Maybe for a year, but not beyond that. See, we had planned the increase based on industrial chain output from Nagpur, but the weather has postponed due to heavy rainfall. Our factory has been delayed. And the other reason that I would ascribe is for the RSIAL, our steel company acquisition, has been delayed now by 3 years. And there has been no maintenance, no upkeep. So the court has now ordered it in our favor. But then we have to take it up, and the repairs, maintenance and all that is going to take another year. So we have to postpone all our projections a little bit.
Okay, all right. Hi, Mr. Vijay Kumar. Good morning, and good to see you in. Let's talk about the industrial chains plan, sir. That has been getting pushed back, as you said, because of weather concerns. Tell us, for when does it get ultimately up and running, point number 1, and what kind of revenue contribution do you see it give in FY25? And from there, how do you see it scale up, say, in the next 3-5 years? Because that's something that the street is banking on, the industrial chains business.
We will be running from April 1st onwards. Production will be there and sales will be there. And for the next year, we see a turnover of about 60 crores from there.
60 crores, all right. And how does it ramp up, sir, from there? And what could be the rough margins on this industrial chains business?
A lot of changes are there in Europe, so we have to wait and see how things will shape up. All this Ukraine war and all that, I don't know how it is going to settle down and how Europe is going to accept all this business.
Okay.
Earlier, you were talking about industrial chains doing 200 crores. When does that happen?
I would like it to happen next year, but
It's okay.
I would have to see how it goes. I think it is still possible. If not in Europe, we should try to also supply the US. So it is possible, but there is a setback.
Definitely, there is a setback. We are seeing it in your operational performance as well. So, you've scaled down your revenue growth guidance from 10% to 7%. Would you want to scale down your margin guidance as well? Earlier, you had spoken about a margin of 19 to 20%, but this quarter you've exited at 17%. So, where do you think you will end the year with, and what are you looking at for FY25 in terms of margins?
Well, if you go back, I've always said that our margin will be about 17%. And our margins now are at about the same, what I predicted, 17%. Our net profit is higher at 9%.
Okay, so you're sticking to this number. 17% margins is something that you will end the year with, is what you're saying. But Europe, since the pressures are still there in Europe, and exports as a percentage of your total revenues is about 12% now. If this pressure continues, do you think it would be hard for you to maintain the margins at the 17% level as well?
It will be a little difficult. We may have to spend a lot of money on other areas. We may have to make our product more accessible to other markets. So we may have to do a lot of seeding. But I would still aim at about 10% growth. Though 10%. We are temporarily down at 7%, we would still aim at about 10%.
10% growth for FY25?
Yes.
Got it. All right. Mr. Vijay Kumar, when you've joined us in the past, you told us that one of your family members was selling, but you're hoping to go ahead and increase your stake. I'm going through your release and you've issued some warrants to yourself. Could you tell us, post this warrant conversion, how much does the promoter ownership go up by? And ultimately, where do you see this holding go up? I think you're at around 33.7%, the entire promoter holding. So post warrant conversion, where does it go? And ultimately, where does it go?
More than where does it go? I think you should ask me what I would like to have. What I would like to have is about 39 to 40%.
Okay.
Okay.
So right now we're increasing by 1%.
By 1%, this warrant conversion will increase your stake by around 1%.
Yes.
So the remaining 5%, then what do you do? Do you issue more warrants, or will you start buying from the open market?
Depends upon how much money I can put my hands on. That is my restriction. So whenever I have money, I'm going to, if it is a small amount of money, I'll buy from the market. If I can put together a package, then I would look at doing a warrant again next year or the year after. There's also a possibility of buyback next year.
Oh, okay. So you're looking at a buyback as well next year, but you are hopeful that you're going to increase your stake from these levels for sure. What is your target again? You said by the end of next year, where do you hope the promoter stake to be?
Please, not next year. Within the next 2 to 3 years, I would like to take it up to 39%.
Okay. 40%. All right. So within the next 2 to 3 years, you want to take the promoter stake to 39%. Got it. One final question on the balance sheet. Are you seeing a rise in debt? What is the absolute debt figure right now? And given the kind of pressures that you're facing, do you think you'll have to take on more debt?
We have very small debt. Maybe we will reach about 100 crores. Right now, I think it's at about 80, 85 crores.
So this buyback that you're talking about, that's a possibility within the next 1 year, and you will not participate, right, in that buyback?
No, we can't participate in that buyback. The regulations will not permit us, and we don't want to.
Yeah, because you want your stake to go up. So that's why I just want to confirm that. And it's a possibility in the next year or so, in FY25. Will you look at this?
Yes, next year.
Got it. All right.
This year we can't, because the issuing warrant we can't.
Warrants, got it. Got it. Yeah, that's why I just wanted to check on that point. All right, Mr. Vijay Kumar, thanks so much for joining in. You've scaled down your guidance a little bit. You're optimistic you'll grow by 10% in the next year. Hopefully that industrial chain segment as well starts firing, and margins will hold at around 17%. And you would like your stake to go towards the 39-40% in 2 to 3 years. For the time being, the stock is down 3.5%, but I think it's up 75% in the last 1 year or so. But let's focus on the big Nifty loser. That's Bajaj Finance. Abhishek joins us to tell us why is that stock down. Abhishek.
Well, it looks like, management guidance and the provisions which increased on a sequential basis, both these are putting pressure on the stock. In terms of the earnings, both the ANA and PAT is ahead of our poll. Operating profits were up about 5.3% sequentially. However, provisions increased by 15.9% on a quarter-on-quarter basis. So the rise in provision is higher than rise in NII or the net interest income, and that has spooked or caused worry on the street as well. Asset quality has largely been stable. Gross NPA ratio has increased by just 4 basis points quarter-on-quarter. Net NPA ratio has increased by just 6 basis points quarter-on-quarter. The calculation shows that the net interest margin has dipped both YOY and quarter-on-quarter comparison. However, analysts were factoring a 12 basis point increase in net interest margin. So the dip in net interest margin has also caused a worry. In the con call, Rajiv Jain did say that there is a lot of noise about him on an ongoing basis. So he will continue to be actively involved in shaping the strategy of the company as well as the subsidiaries of Bajaj Group. Brokerages view UBS has a sell rating target price at 6,800. They say that they believe that consensus is overestimating Bajaj Finance ROA, that is return on asset profile, despite increased competition, regulatory risk as well as the large size that Bajaj Finance is right now. HSBC has a buy rating but a target price of 8,900. They say that they have cut EPS estimate between 3 to 5% for FY24 to 26 to factor in lower loan growth, lower fees and higher credit costs. So it looks like the higher credit costs going ahead has weighed on the stock price today. Back to you.
All right. Abhishek, thanks very much for that. I just want to quickly put out one stock, which is Kirloskar Electric Company. If you can have that up, I think reported numbers, and it's taken off like a rocket. It's at 138 odd rupees, 11% higher at the day's high. The intraday will tell you the story. This is Kirloskar Electric Company, which I'm talking about. Maybe we'll be able to put it out in just a bit. We'll take a quick commercial break here. Manisha will be with us with commodities in just a bit. Stay with us.
All right, let's get you a quick handle on what's happening in the world of commodities. Manisha Gupta is with us. Manisha, what's the one commodity you're tracking today?
Well, I'm looking at the aluminum prices, Sonia, because this is a metal that has done quite well in the last 1 week. Actually, we've seen firmer prices onto this one, and this is on the back of the Red Sea disruptions. We do understand that around nearly 3 million tons per annum of aluminum passes through this route, and there are delays. There are also higher freights that aluminum is dealing with. And then you have the crude oil prices as well, trading at above $80 to $85 between that range, and that's adding the premium to prices here. The markets also are watching out statements, various developments, where the street expects EU to actually introduce further restrictions on imports from Russia, and aluminum could perhaps be one of those metals. There already are statements from Poland, Baltic states calling from European Union to ban Russian aluminum coming in. We do understand that on alumi warehouses, almost 80 to 85% aluminum that is put in is coming in from Russia there. The Yunnan smelters also are expected to cut output due to limited power supply. This comes in from China. So we are looking at production concerns from here as well. Remember, 2023, aluminum production was at record high in China, but winter period usually is a time when you see the production go down. And it also is about the Chinese New Year, the 1 week holidays that would come in the month of February. So we are looking at activity actually slow down ahead of that as well. Having said that, well, we are looking at weak Chinese demand. As of now, the economic data has been quite uneven. While we have seen the reserve ratio requirement being brought down, but the other data clearly hasn't seen a directional change as yet, and that's what the markets are seeing in sense of correction there. This is what we've seen in sense of European imports coming in from Russia. So while 2022 was 1 million ton, in 2024 the estimates are that it would be less than half of that at just about 400,000 tons there. So this is the one thing that the street will watch for, and is some pressure that you can expect in case of aluminum rises there. The other is the surplus part of it. In 2023 we were dealing with a surplus of 800,000 tons. Now this year the expectation is that that surplus is going to be lesser because the Europe restarts have not come in yet again. The markets believe that it will be almost 2025 that we will see aluminum smelters coming back online. If you look at the forecast in sense of prices, well, most banks, brokerages believe that you could be looking at higher prices. This is what we've done in sense of prices in the last couple of years. Not very great years. And this is after 42% of gains in aluminum in 2021. So as you can see, it has been consolidation, even some profit taking that we've seen in 22 and 23. 24 has started on a firmer note, but when you look at until now, we are down by about 1% even now. So we are trading at around 22.50 there, and that's exactly where ING expects the prices to average for the rest of this year as well. The others are slightly more bullish. Fitch and Morgan Stanley believe that 23.50 is where the aluminum prices could go to. Citi most bullish, expecting the prices to go all the way to 2,800 as an average for this year.
All right, Manisha, thanks very much for that. So that's commodities and focus. We'll take a break here. Lata will get chatting with Dinesh Kanabar, Chief Executive Officer at Dhruva Advisors, and Sudhir Kapadi, a partner tax and regulatory services at EY, about their tax relief expectations from the interim budget 2024. Stay with us.
budget is ultimately all about taxes, but this particular budget, experts are faced with a dilemma. Will it be a vote on account and therefore perhaps nothing at all in terms of taxes? Or will it be a pre-election budget and therefore have a lot of populist measures in terms of taxes, sir? As well, are there any urgent steps that have to be announced because of, grandfathering and other deadlines that you must expect from this interim budget, or call it vote on account? Joining me to discuss all that is Sudhir Kapadia, partner at EY, and Dinesh Kanabar, the CEO and Managing Director of Dhruva Advisors. Gentlemen, thank you very much for your time. Mr. Kapadia, first to you. I think the one that is unmissable is the one that expires, that 15% corporate taxes for new manufacturing units. That expires March 24. Are you expecting an extension?
Yeah, absolutely, because along with the PLI scheme, as we know, Lata, there is a lot of encouragement by government, not only for the announced PLIs, but more and more sectors are being thought about for the right reasons. Again, as a signal for attracting more both domestic and foreign direct investment in capital projects, I think it is imperative for government to extend this new manufacturing unit scheme with a lower rate of 15% along with the PLI, and therefore a one-year extension is certainly expected. I would hope that at least a policy announcement is made to give more certainty and stability to this new tax regime, and just make a policy statement to say that this will be the rate for the next 2 to 3 years. But that could be a policy statement, but certainly an extension of a year.
Okay. Well, Mr. Kanabar, good morning. A similar question to you. Is this something that one should expect? I mean, one hears a lot of counter arguments that already corporates get a far better deal than do individuals. And secondly, tax is hardly the reason why people manufacture or don't manufacture in India. There are a whole host of other reasons. So do you think this merits a push?
So this policy was brought in 2019 when the Prime Minister had gone to USA. He met up with several of the industrialists there, encouraged them to come down to India and promised them a very simple tax regime. And that's where this was introduced. It has been pushed back because of COVID. But the point that I was hoping the Finance Minister will agree to is that we are making ourselves as a credible counter to China. And we want people to relocate their manufacturing bases, or at least make it China +1, Europe +1, whatever you like to call it. And the point is that unless you are able to give a stable regime, that is not going to happen. I agree with you that nobody is coming to India only for taxes. But taxes do play a very, very important role, Lata, without an element of doubt. And this 15% regime has seen a huge amount of investment. And I would actually want the government to make a policy statement to say that we are extending it for a period of 5 years, not because of COVID or whatever else, but because we are pitching to say that as opposed to Vietnam and everybody else against whom we are competing on this front, we are very attractive.
Okay. Okay, well, let's see if that is even extended by 1 year, and a more, relaxed decision, policy decision, as you call it, is postponed to the June budget. That's pretty much possible. The big debates are taken there. But, my producers are flashing only the personal income tax numbers. So let me get to that, because I think that's what they want to hear. Mr. Kapadia, first, do you expect any changes in this usual debt mutual fund and equity mutual fund, long-term, short-term, indexation, anything at all that will be tinkered? We got this huge heart attack last time with the indexation and debt fund benefits being taken away.
Yeah, but the patient has survived and thrived after that heart attack. So I don't personally think that in the interim budget, there will be much change in or overall of the capital gains tax regime. There is a need for an overall to rationalize a lot of the holding period provisions, etc., especially vis-a-vis equity and real estate, etc. But I don't think this will be the time. As you rightly pointed out, the overall of the debt mutual fund taxation has already been put in place. The arbitrage which was available vis-a-vis bank fixed deposits has now been largely removed. So I don't expect any major changes in the capital gains tax side as far as the interim budget is concerned. As I mentioned, there is a scope for aligning the holding periods for long-term assets like real estate and equity shares, but perhaps a more comprehensive review in the full-fledged budget in July would be the right opportunity for the government.
Fair enough. Okay, now my producers want us to talk about personal income tax, standard deductions, etc. Well, so Mr. Kanabar, first, if you want to add to anything on mutual funds, and I mean, do you have different expectations, but more importantly, personal income tax?
No, I don't have different expectations. And Lata, this is going to be a vote on account. There's only one thing which could potentially happen. So we have the new tax regime and the old tax regime for individuals. And while on the corporate side, almost 80-90% of the corporates have moved to the new tax regime, in the individual side, the percentage is very minimal. And therefore, I would not be surprised if there are some things which are done to make the new tax regime more attractive to individuals, like pushing up the taxable taxation slab rates, exemption slab rate, such that people are incentivized more and more to go towards the new tax regime. As to whether that will happen on an interim budget or later on, I don't know, but I would not be surprised if it happens, because to some extent it would be a bit of a populist move, and maybe deservedly so, because that's something which is what is expected by people who like to move to the new tax regime. And coming to the other point which you made, debt mutual funds have survived, so have insurance policies survived. So I think changes have happened. We have sort of brought about a bit of stability. Coming to a rationalization of the period, the least period is a 12-month being regarded as long-term for equity markets, listed equity shares. And I don't think the government will want to tinker. The market is doing very, very well. The market is booming, and I don't think government wants to do anything. If at all, I think this is a time for government to seriously think about disinvestment, because that's something where PSU stocks have rallied over the last 1 year. Given that situation, it is just important that the government takes advantage of it and is able to push the disinvestment agenda further. I see you flashing whether ATC will be increased, whether others will be increased. I don't think those are what's going to happen in the interim budget. That will have to wait for the final budget.
Okay, no, but I'll tell you where this desire springs from. Of course, eternally it springs from a desire not to give away the money you earned. But more importantly, Mr. Kapadia, the chief economic advisor, the past and the present have argued that the past has argued that PM Kisan Samman Nidhi could be raised from 6,000 to 8,000 rupees per farm family, because it has to be indexed to inflation. 2019, 6,000 rupees doesn't buy the same thing today. By that logic, income tax also deserves a look in, doesn't it? Do you think? And again, pre-election. So, lowest slab, any reliefs you expect?
So you saw that in 2019 interim budget. There was an increase in 87A rebate, for example. Also increase in the deduction for self-occupied housing from one house to two. So definitely the government has the opportunity to give relief on personal tax if they want to. Just 2 points there. In my personal view, the government would now look to making the new scheme more and more attractive and will not have a mission creep of coming back with deductions in the new scheme. So it's much simpler to increase the standard deduction from 50,000 to, let's say, 1 lakh. And that would be a proxy for whatever other deductions, are not available under the new scheme. Okay. And secondly, you have the 10% rate kicking in at 9 lakhs annual income. That can be tinkered with and made 10 lakhs in the interim budget, for example. So I think the focus will be to make the new scheme, the CTR, more and more attractive and not have unnecessarily an increase in the deduction regime, which we want to move away from.
No, absolutely. That spares us a lot of trouble as well. In any case, these days, it's so easy to fill up an income tax form. Mr. Kanabar, any thoughts on this itself? Housing. There is always an attraction, a desire. You think they'll tinker and give us any more benefits on housing at all? And then let's move to the other corporate issue. the MNC's taxes. That also is something which some people argue, the significant economic presence rules. Anything on those esoteric lines that may be changed?
So one item, coming to the corporate side first, which is what people are eagerly looking forward to, is how does India react to the OECD changes which have been brought about on Pillar 1 and Pillar 2. Most countries have already started putting domestic laws, and how do we react to them is something which people are waiting to see. It is something which is potentially a revenue generating item, etc. I would not be surprised if this is brought about. The only thing which sort of I hesitate to say it ought to come in this interim budget is that government may actually want to wait for the final budget. But given the fact that India is one of the signatories to the OECD Charter, one of those 123 countries who have signed it, and a lot of countries have already come about with their domestic law, India ought to do so sooner rather than later. As to whether it will happen in this interim budget or in the final budget remains to be seen. I would not be surprised if the government waits for the final budget, but this is something which is imperative and ought to happen. On the housing front, Lata, after a lot of time, maybe about a lull of about 7-8 years, the housing and the entire real estate sector has revived, is doing very, very well. The only thing that the government can do is to increase the interest deduction for second home. And I don't know whether, given the fact that the industry itself is doing well, the government needs to give a further incentive to individuals to make those investments. We are seeing how large houses transactions have happened. You're seeing newspaper reports on how sizes of the houses are going up, etc. And I don't know whether the government will have that incentive to provide that higher interest deduction, because people are, as it is, prospering in the housing regime at this point of time.
I agree with you. I agree with you. Optically, it is premium housing that's doing far better than affordable housing. So a tax benefit need not necessarily be a big populist clincher. Just final yes and no from both of you. Income tax, ultimately, it will be an election. So, Sudhir Kapadia, anything we should expect at all? This year, income tax has given the government a 35% growth in kitty in the first 8-9 months that data is available. They could give away something. Do you think they will?
Sorry, Lata, I was actually going to just point out that if you see the share of personal income tax in the total tax kitty, today it stands at 50%, 50. It used to be just under a decade ago, only 40%. So government has done very well on the personal income tax front. Mind you, that personal income tax is not just salary taxation on salaried income alone. It includes all non-corporate tax sources. Yeah. So to your point, can they afford to give away? But, we have to keep in mind the FRBM. We are still far, far away from the FRBM target of 3%. Even the last year's budget has put a glide path of only 4.5% for the next year for fiscal deficit. And therefore, I don't think the fiscal space is necessarily very easy for the government, to be fair. So at the lower slabs, yes, but I don't think anything much can be given away at the higher slabs.
No, that's a fair point. The government has commitments elsewhere. And then if this PM Kisan Samman Nidhi is also increased, there are also other expenses to be borne. Fair point. So we're not going into this budget with very high expectations on the income tax front. Anything that comes will be very positive, especially for consumption stocks. So note that, Mr. Kanabar and Sudhir Kapadia, we will be inviting you, of course, on budget day itself. And we will take a rain check on how things pan out. Thank you very much for joining us with your budget expectations. Wrap up on this special show. Chartbusters up next.
Bajaj Finance slips as asset quality deteriorates sequentially. Brokerages like UBS issue a sell call on the stock. They set a target price of 6,800 rupees, citing overestimated growth projections. HSBC too cuts their EPS estimates.
ITC slumps on the back of a soft third quarter numbers. Cigarette volume growth remains muted, and while weakness persists in the agri and the paper businesses.
Petronet LNG hits a fresh 52-week high, up 5% for that stock as the revenue grows over 17% in the third quarter. Volume rises nearly 40% year on year as well.